Hey there, everybody. This is Bob with Trade Genius. Got my good friend Phil with me today. The markets hit all-time highs. Is a crack-up boom happening, or are we being deceived? Stay tuned.
Trade Genius.
Hey everybody, it's Bob with Trade Genius. Hey, it is holiday season and our holiday specials are running right now. Use promo code HOLIDAY. You already blew it. You missed the Black Friday specials, but this is your second chance to take advantage of some of the best pricing that we do for the year. Check us out, tradelikeagenius.com, tradegenius.co, tradegeniusacademy.com. All roads lead to Trade Genius. Check us out. Incredible deals. Thanks for listening. Okay, Phil, I'm going to start off with a stat that probably will blow people away. And this is, I think, probably the cognitive dissonance everybody's been having with this stock market. You can't argue that the indexes, not all of them, are hitting all-time highs, but people aren't necessarily seeing it in their portfolio. Throw this slide up for me. We hit all-time highs on Friday, but since the last all-time high we had in January of 2022, the Russell 1000 is down almost 6%, and the median stock in the index is down almost 10%. And what that tells you is that the concentration, and this has been our bone to pick with this whole move, I think, is that context matters in these cases. Is that, you can't just claim this is a new bull market because one index is killing it. People don't invest that way, or there'd only be 7 stocks in the stock market.
Right.
And a lot of the portfolios are down year over year, which is amazing in an economy that's starting to slip. But we want to also show you is that markets don't crash on good news. And I'm going to throw it over to you, Phil, because you brought up some really good slides here to show people why they should be absolutely terrified instead of euphoric.
Yep. So let's go over to our first chart. So this basically shows you that whenever we're getting an all-time high and rates have risen or are at their peak, and I think we have pretty good cause to believe that rates are at their peak. And as you guys know, in the market actually is pricing in rate cuts, so kind of reinforces that the rates are at their peak. But notice every one of these red arrows when we're in this situation where we do make an all-time high. And remember, typically the markets do make all-time highs ahead of a recession. It's like you get that final squeeze before it rolls over. And a lot of times, if you look at it from an institutional standpoint or a market maker standpoint, they can get extremely short by forcing that last push up. And as Bob mentioned, this isn't a broad push. This is basically 7 stocks kind of perverting the index, but it doesn't matter because if the index is making an all-time high, those derivatives are at all-time high. So you can short the SPY, you can short futures. It doesn't matter what the underlying basket really is telling you, other than the fact that those derivatives are now at a high valuation, their highest valuation, and you can maximize downside profits by going short those derivatives. So that being said, you can see here why this is not really bullish at all historically, right? Every one of these red arrows eventually, and then the only difference here is just how much time from when you get that all-time high to when you roll over. The other chart that I wanted to show everybody here, Bob, was when we get these all-time highs during the 2-10 yield curve inversion. So the 2-year and the 10-year yield curve is inverted. And if you look at that, here we go again, you're getting all-time highs. Now again, not every single all-time high immediately results in a dump, but they tend to precede recessions, right? So what we're looking for here, guys, I think the theme of the day is going to be the jobs data. Now, we had a pretty good initial claims beat, so I can't be in the recession camp here at this point in time. What you can be, though, is focusing on what matters in the shorter term, and that would be that the structural flows after OPEX tend to be weak. So broadly speaking, down over the next 2 weeks. And then as you start going into that new OPEX in the middle of February, you could potentially see a run up. And then again, another set of weakness going down into March, which is seasonally weak anyway. But if the jobs data maintains through all of that structural flow stuff, you could potentially see another surge going into summer. Now, at that point, you need to have your magnifying glasses out and looking at what the jobs data is doing. Remember, we talked about in yesterday's video, though, that we still have these, they're starting to creep up, these layoffs at big companies now, right? But they're small, but they're across the board. So what we're seeing is kind of this, we're not expanding like crazy, right? We're just seeing like this initial, what I believe is this initial surge in layoffs that's going to start building. And at some point, the market and the mainstream media won't be able to ignore it. And at that point, you'll find that the institutional players are already betting against the market and are already short. And I would argue that the all-time high probably is in at that point, and you're basically not looking at it that way, but what they're doing structurally is putting in a lower high before you know it. And next thing you know, market's down 10, 20, 30%.
Yeah, the only thing I'm going to say, Phil, and I'm not going to really quibble with your analysis, because I think it's pretty right on, is that I think the unemployment data is going to fool a lot of people because it's not really telling the right story. There's not enough workers, but there's also not enough skilled workers, but companies also don't want to pay what the workers absolutely require. So I think we're in a situation where people have to make more money, and the only way they're making more money is they have to take on more jobs.
Yep.
And I think it's fooling everybody into thinking that everything is really, really rosy out there when things are probably, I think, are really on the cusp. And look, I have personal data. I know, by, like I said, my wife's business is a really good proxy. And so we see things about 3 to 6 months ahead of the economy because of the people that are my wife's clients. And it's raising an alarm bell, okay, for us. And, the good news for us is that, we manage our businesses in such a way where we can weather really any economic situation. But big companies cannot. They have fixed costs. And what's going to happen is you're going to get massive margin compression after they start laying off people. And I think we're starting to see the front end of that. And so I think the baseball bat's going to hit the stock market before people are expecting it. And that's my only view on this, is that, Phil may be absolutely right, but I'm really worried that companies, they turn this stuff off like a light switch. And, and I worked for corporate America, and I know how fast you can walk into a meeting and you walk out of a meeting, not realizing that in 2 weeks, you're going to get massive right sizing, if you will. And I think you're going to see some of that stuff. Expectations are just way too high in these companies right now in terms of what cash they need to generate. And, we're running out of runway for them you can't grow to the sky, Phil. And so that's my big worry. But we want to show you here, markets fall on good news. They don't fall on bad news. And I think that's where we're at right now. So great slides, Phil. And I think people, need to buckle up and get ready. Next 2 weeks, we're expecting weakness in the market. It's just technical. But if it carries on into February, into March, then I think we have a little bit more involved there. And then I totally agree with Phil. I think April and May are going to be probably crack up booms going into the second quarter.
Yeah. So guys, let us know what you think. Do you think that we are really in the final stages of a bull market, or is this the beginning of a new bull and we're going to see just nonstop all-time highs for a very long time to come? Let us know your thoughts below. Otherwise, guys, please hit like and subscribe, smash that notification bell if you can, and also check out our products over at tradegenius.co, where we have things to help you make money in this market. Take care, guys. Thanks, Bob. We'll see you guys on the next video. Bye-bye.
Trade Genius.